Welcome. My name is John Mazzara. I'm with Remax Results. And today with me is Preston Schmidt. And
Hello.
he is our mortgage representative. And he's going to be speaking on mortgage programs. I'm going to talk about the home buying process. This is my 35th year selling homes. I've sold over 1,000 homes throughout the Twin Cities. So I'm going to give you some knowledge, some brief knowledge about that. We're really going to focus more today on the mortgage side because nothing happens until you're pre-approved for a loan. So we start with that in mind, and then we go out and find the home. But let's take a look at the flow chart of what's involved with buying a home. So I'm going to share my screen. And so these are the 9 steps to home ownership. First step is getting educated. So what we're going to do when we sit down, and we can do this virtually or in person, we're going to talk about your situation, what you're looking for, and when you want to buy a home. Based on that, you're going to figure out what your budget is and what you can afford. And then you're going to get pre-approved with a lender. Now, Preston is a mortgage broker, so he has many different programs as well as investors that buy those mortgages. So the advantage of working with Preston is that he has access to lots and lots of options. And he'll go over that when it's his part of the presentation. But we'll get the mortgage part in place. You'll have an approval letter. And based on that, I can set up your MLS search from which we'll use to go ahead and shop for a home. We'll define your minimum parameters. We'll set up a search based on that, and then we'll start looking. Once we're out there looking at a home, we may decide we want to buy it. And it's not unlikely that we'll end up in a multiple offer today. That means you may lose a couple homes along the way on your path to home ownership. Somebody might bid more. The problem today is we don't have enough homes for the number of buyers that are interested in purchasing. So just know that that is a likely possibility at this particular time in the marketplace. Once we do get a home under contract, then what we do is we have a home inspection if you choose. Now the home inspection can be informal, meaning it can be friends and family, or it can be of various companies and or add-ons. So it can just be a basic home inspection. It can include radon. It can include a sewer scope, mold, chimney inspection, all sorts of things. It's all up to you. There's a cost, of course, associated with each level of inspection. Once the inspection is done and we've had any negotiations from that, then you move on to your final stage of your mortgage application. Preston will go ahead and get updated documentation regarding pay stubs and bank statements and asset statements if necessary, as well as order out the appraisal. And then they'll get the appraisal done, that'll all come in, and then the underwriter will final underwrite the loan, which will move to an approved loan. Once that's done, we can schedule the closing. The closing takes about an hour. You sign about 50 times. And at the end of the closing, you get the keys. The seller gets a check for their equity. After that, you own a home. So congratulations and welcome to home ownership. You may decide that you're going to host various holidays or have a housewarming party. So if you do invite some friends over for a housewarming party, Preston and I would love an invitation. And we'll bring some adult beverages or non-alcoholic, your choice. So just keep that in mind that we'd be happy to provide that after closing. All right, the next thing I want to show you is from a website, and you can get to this website at MPLS, like Minneapolis, mplsrealtor.com. And on that website, you can get various reports. And all the reports are a compilation of data from the North Star MLS, and that's our multiple listing service. And so this gives you an idea of what's happening. Now, I happen to pull up Minneapolis here, but we can pull up any city throughout the 16-county area. And we can drill down to individual neighborhoods, for example, within Minneapolis or St. Paul. And what that allows us to do is see what's happening from a macro or even into a micro then basis. And that'll give you a feel for what you might be up against. So in Minneapolis in the aggregate, and it's always approximately a month and a half behind because the data has to have occurred for the numbers to be crunched. So here we're looking at December, and it gives you a month-over-month comparison from December of 20 to December of 19. If we look at the median column, we see that the December price change over a year is up about 6%. And then our question is that part of a trend or is that an anomaly? So if we move to the next column where it says rolling 12 months, what we see is that data is averaged out and it's up almost 7%. So that 6% is indeed part of a trend, and the trend is upward. So Minneapolis is appreciating. Down below, a couple other things are the percent of original list price received. In December, it was about 97.5, a little bit higher than it was a year ago. But in aggregate over 12 months, it's 99.7, so almost full price, which means that you as a buyer have very little negotiating ability, unfortunately, because again, there's a supply-demand imbalance, which is borne out down here when we look at months of supply of inventory. We see that at this given time, there's only a month and a half supply of inventory, which means if I took the number of homes for sale and divided them at the rate in which they were selling and I froze time, I would run out of homes in a month and a half. 5 might be more of a balance between buyers and sellers. We're not at that. So because we don't have enough homes, prices go up and you have bidding wars. So that's just an example of that report. And I mentioned in Minneapolis, you can break it down to individual neighborhoods. So you might be interested in Calhoun Isles or North or University. All of that data is provided in this report. Same thing for St. Paul. We see St. Paul has also increased in value, both year over year and rolling 12. So the core cities, Minneapolis, St. Paul, are both strong, and you can see the individual communities, again, how they're ranking. But everything is pretty much positive throughout both cities as far as appreciation levels. So with that, I'm going to go ahead and I'm going to pass the screen sharing back to Preston here in just a moment. And he's going to walk you through the whole mortgage process. And again, that is the most important part because I can't begin my job finding you a home until Preston has started and completed his pre-approval process. So I'm going to stop the screen share and pass it back to Preston.
Thanks, John.
You betcha. All right, Preston, you are the host, my friend.
Alrighty, let's see if I can get mine shared here. All right, everybody's seeing this okay? You able to see my screen, John?
Oh, yes, I am. Thank you.
Perfect. All right, so my name is Preston Schmidt. I'm with Mintrust Mortgage. I'm a mortgage broker, is what John mentioned. What that means is that I'm actually a licensed mortgage broker, meaning that I kind of know what I'm talking about. I've been doing this for a long time, and I have a very long financial background. I may look young, but I have quite a lot of experience under my belt. But what I just want to do is kind of at least explain by showing this quick video of why you'd want to work with a mortgage broker. Down here, it says connecting with the independent mortgage broker in your area means having a local expert by your side for one of life's biggest financial decisions. And because we're independent, licensed professionals, mortgage brokers can shop multiple lenders, not just one, giving access to more home loan options than what a bank or an online lender may offer. The result is cheaper, faster, and easier for mortgage for you, and that is tailored to your specific home financing needs. So there's not as much overhead for like an actual correspondent or bank that they have to pay. So it keeps the pricing and the fees all lower for you. So whether you're buying a home or refinancing, find your perfect mortgage match by working with a local independent mortgage broker. And here's a quick video explaining it.
Unless your dream home is fun. You get to shop houses of all shapes, colors, and sizes, and choose the one that's perfect for you. But when it comes to finding the right home loan for your purchase or refinance, choosing can be overwhelming. Unless you work with an independent mortgage broker. Most banks and big online lenders only offer their own mortgage products with limited options, limited communication, and lengthy waiting periods that can drag out your closing. When you work with an independent mortgage broker, you have a local mortgage expert on your side to personally advise you throughout the process and who has your best interest in mind. They'll shop dozens of lenders to find the right home loan for your needs. They're also experts at finding you a low monthly mortgage payment and have fast turn times to get your loan approved and closed. Plus, many have the ability to offer a digital process that's incredibly fast and easy. It's best to get pre-approved with an independent mortgage broker before you start looking for a home. They're easy to get a hold of and are available to answer any questions you might have. Then, when you find that place that's just right or you're ready to refinance your current home loan, you'll have someone you can trust to guide you through the process, from application through closing. So you can be as happy with your mortgage as you are with your home. Find your mortgage broker today at findamortgagebroker.com.
And UWM happens to be one of my top lenders that I love working with. So they actually own and manage this findamortgagebroker.com website. So let me get rid of this.
Finding your dream home is...
And then I'm going to move into kind of a couple of the down payment assistance programs that are available to you guys. So the one I'd like to start off with is a very popular one, and it's actually sponsored by Wells Fargo, which is the Neighborhood Lift program. And this is roughly a 7-minute video, but it does explain everything thoroughly. I could say a lot of this, but I'd rather have it come from an actual Lyft member directly. So here you go.
My name is Kim, and I will be joining you as we walk through the steps to buying your own home with Neighborhood Lift Down Payment Assistance. Neighborhood Lift offers homebuyer education plus down payment assistance for first-time homebuyers and ready-again homebuyers. Neighborhood Lift is funded by Wells Fargo and is designed to help homebuyers with steady incomes, but who may experience challenges saving enough money for the down payment needed to buy a home. Lyft programs have assisted homeowners in over 1,000 communities across the U.S. since 2012 in collaboration with national nonprofit NeighborWorks America and its local network members. Now let's review the steps you need to take to buy a home with Neighborhood Lift Down Payment Assistance. First, check to see if Neighborhood Lift is available in your community. Go to wellsfargo.com/Lyft to see the areas where the home must be located to be eligible for Neighborhood Lift Down Payment Assistance. There, you can see if your income is within the program's income limits for your area. From the Neighborhood Lift website, you will be able to also visit the NeighborWorks Network members website administering the program in your community. If your income is within income eligibility limits and you want to buy a home where Neighborhood Lift is available, your next step is to take a homebuyer education course from a Neighborhood Lift approved provider.
Borrowers who go through our process of homebuyer education and counseling are third less likely to experience delinquency in the first 24 months of home purchase.
You can find a list of Neighborhood Lift approved homebuyer education providers on the local NeighborWorks Network members website. Now you are ready for the next very important step, acquiring a mortgage pre-approval to learn the price of the home you are qualified to purchase. You can choose Wells Fargo as your lender or contact any participating lender approved for Neighborhood Lift in your community. You can find a list of participating lenders on the local NeighborWorks Network members website, available by clicking through wellsfargo.com/Lyft. Once you have completed the required homebuyer education and obtained a pre-approval for a mortgage, now you're ready to apply for down payment assistance funds. Visit wellsfargo.com/Lyft and click through to your community to confirm when funds will be available. Once funds are available, you can start your application for down payment assistance by visiting the local NeighborWorks Network members website, available by clicking through wellsfargo.com/Lyft. The local nonprofit will let you know when you are selected to move forward if you're eligible for down payment assistance. Part of this process includes sending documents to the local nonprofit. You'll need to submit your completed homebuyer education certificate, your mortgage pre-approval letter, plus income verification documents such as pay stubs, tax filings, and W-2s. Once the NeighborWorks Network member has reviewed your documents and determined that you are eligible to move forward with next steps, you will be sent a letter by email confirming you have reserved Neighborhood Lift Down Payment Assistance. Once you receive a reservation letter for down payment assistance, now you're ready to shop for a home. With that reservation letter, you'll have 90 days to find a home that meets your needs and sign a contract to purchase the home. You may find it helpful to get advice from your home buying team, including your lender and a real estate agent, to find a home that is just right for you. When you have signed a contract to purchase your home, you will want to work with your Neighborhood Lift approved lender to finalize your home mortgage with Neighborhood Lift. This includes determining the right loan for you. To help you be a successful homeowner, your home buying team will help you plan for your responsibilities, such as an escrow account for property taxes and insurance. After you've finalized your home mortgage, you are ready to close. Your home lender and real estate agent will help you schedule a meeting with the settlement agent to complete your home purchase with Neighborhood Lift. You will walk out of your meeting with the settlement agent with keys to your very own home. I hope you found learning more about these steps to purchase a home with Neighborhood Lift down payment assistance helpful. In addition to this introductory video about how Neighborhood Lift works, our friends at NeighborWorks America have developed additional educational videos to help you with your path to home ownership. These educational videos, which include managing your credit and steps to prepare for home ownership, can also be found at wellsfargo.com/lift. Wells Fargo believes in the importance of home for everyone. Owning your own home may help you become more financially successful by stabilizing your housing payments and removing the uncertainty of renting. Following these steps can help guide you on your journey to buy your own home and join thousands of other families who have achieved home ownership with Lift programs in collaboration with NeighborWorks America and Wells Fargo. Thank you.
All right, so that basically explains the Neighborhood Lift program a little more clearly. So what I wanted to kind of touch on were two things that she mentioned are the area median income, kind of wondering, what you qualify for and do you make too much money to even qualify for this? So I just picked a random city, happens to be in Ramsey County. This one actually shows the area median income to be about $102,800, which means that that is the average area median income allowed in order to qualify for the program. However, there's certain programs, and I'll bring up one here shortly, that cap you at 80% of the area median income, which is $82,240 for this particular city, which is pretty average around the area and for the county of Ramsey. She also mentioned homebuyer education. There's a lot of online ones, especially with COVID right now. It is tough to find in-person classes. I'm sure they'll open back up again, but these are very quick, easy, and just as resourceful as the in-person ones. This one's a little more in depth. This one is actually $75, and you could complete this homebuyer course. It takes you roughly 30 minutes or so, I would say. It depends on how fast you want to go through it. And then once you complete it, you get a nice little certificate with your name on it that you would send to me, and I would upload that to your file to prove that you went through this class successfully. All right, next I'm going to talk about, again, really quickly, the mortgage checklist. You may have gotten this PDF emailed to you, but if you didn't, we will have these for your ability to read later on. So first step, again, is establishing credit. In an ideal world, you want exactly 4 trade lines. A few examples of trade lines could be a student loan, a car loan, a store card, charge card, or a credit card. You want to eliminate negative credit items. Examples of negative credit items are collections, judgments, or late payments. You need to make sure you have a down payment of some sort. Consult a mortgage professional to determine if a down payment is necessary for your loan, and if so, see how much is required. You then want to get pre-qualified and have a 10-minute conversation over the phone with a mortgage professional such as myself to get pre-qualified. This process is free and can help you determine how much you could potentially spend on a home. Next, you just start the pre-approval process. Contact your mortgage professional to pre-approve you. This actually will give you then a pre-approval letter. You'll supply the last 2 years of where you've worked, the last 2 years of where you've lived, date of birth, social security number, and any assets like a checking account or savings account. You would verify your down payment. After you provide the information, your mortgage professional will run your credit report for free, and you'll have answered within a few minutes. Next, you'll have to convert your pre-approval to a loan commitment. This process is free, does not obligate you to a loan, and the loan commitment is a misnomer and actually means a human underwriter will review the computer's decision to pre-approve you. So the next step would be to supply supporting documentation. And after you determine with your underwriter and the mortgage professional that it makes sense to proceed with the loan, you'll need to supply documentation, and this includes pay stubs, W-2 forms, bank statements, your driver's license, and any other documents the mortgage company requests. Craft the perfect loan file. You can read how you can by creating the perfect loan file below, and then write an offer letter. Well, write the offer letter for your new home. What are you waiting for? So that's really quick. The next step in here is the Ramsey County program, and then I'll follow that with the Within Reach Land Home Financial down payment assistance program. So there's more down payment assistance programs than you can possibly imagine that I actually have access to. And then lastly, I'll kind of go through and break down how to improve your credit in some simple steps. So I'm going to go through this Ramsey County PDF document here, and I'll go through it pretty quickly. So what this one is through Ramsey County will allow up to $15,000 available to eligible home buyers as a second mortgage, and the funds may be used to pay any or all generally accepted closing costs, including loan points, which is basically buying down your rate, origination fees, if any, appraisals, credit and title examinations, and legal and recording fees. Funds may also be used for down payment costs or principal subsidies, and may be used in conjunction with some Minnesota housing programs. The program is approved by Fannie Mae. So this then basically just breaks down how it's approved through HUD. The first-time homebuyer program through Ramsey County is a first-come, first-served basis to households who meet the income, employment, property, homebuyer education, and other criteria established in Section 3 down below. And to be eligible for this program, it's going to talk about what maximum income you can have. You want to make sure that the people that are receiving these funds aren't making too much money, and that the money is actually going to people who really need it. Annual household income cannot exceed the maximum income limitation as stated by the RCHRA. This limit is based upon 80% of the Minneapolis-St. Paul metropolitan statistical area median income by household size as determined periodically by HUD. And I did show you an example of the Ramsey County one. There's going to be, each county is going to be slightly different, but for the most part, they're pretty close. Moving on, the acquisition price, the current maximum acquisition price, which can change, is $240,000. It used to be $200,000. They did increase it to $240,000 because of just you couldn't find a house for $200,000. They were usually selling for more than that, so they finally bumped it up to $240,000. And it is limited to the suburbs of Ramsey County, not the city limits of St. Paul. So just so you know about that. First-time homebuyer, the borrowers cannot have owned a principal residence within the past 3 years. So you're still considered a first-time homebuyer even if you've owned a home before, but you haven't owned a home within the past 3 years. Homebuyer training we talked about, mortgage qualification we talked about. As long as you're qualified, with either a VA, which is a Veteran Assistance Administration loan, FHA, Federal Housing Administration loan, which is both government loans, or Fannie Mae, which is a conventional type loan. Asset limitations. This is kind of key. You can't have more than $5,000 in liquid assets after closing. So again, they want to make sure that the funds are being provided to people who really do need it. So it's nice to have reserves, and it's definitely usually required to have reserves after you close. But if you have too much reserves, they may say you don't need it. So that's where they put a cap on that. The property eligibility, again, it has to be within the city limits, without the city limits of St. Paul. It must be in a suburban Ramsey County, such as Shoreview or Mounds View, which is actually where I live. Eligible properties include single-family homes, condominiums, townhomes, and land trust properties, which I actually don't ever do, with at least 50 years leasehold interest. And there's one other thing I want to mention to you here down below. Right here, the down payment, buyer down payment transaction investment. So they do require that you contribute no less than $2,000 towards the transaction. Buyers whose incomes are having to be less than 60% of the area median income are required to contribute at least 1% of the property's purchase price. And this may come in form of an earnest money check, which is basically your cash or check deposit. expressing interest in purchasing the property, or in conjunction with other fees that you've put in. So if you pay for the appraisal, which may be $500, you could then satisfy this with only a $1,500 earnest money deposit. And in conjunction, it will come with the $2,000 minimum requirement that you need. All right, so this kind of breaks down a little bit of, the max debt to income ratio that you are allowed to have in order to qualify. So the housing payment itself with principal, interest, taxes, and insurance, which is your PITI, has to be at least 30%. But your total debt ratio, including all of your debt payments, maybe a car loan, credit cards, or student loans, or anything like that, that cannot exceed 45% of your available gross income. So that's that. And then the last part of it is pretty much self-explanatory. Just the requirements of what you need to have. So I don't want to go through all that in greater detail, but the rest of it is pretty self-explanatory. So the next thing I want to talk about is the Land Home Financial Services Within Reach 2.0 FHA guidelines. This one specifically only works with FHA and does require a minimum credit score of 640 to be eligible for up to 3 to 5% down payment assistance. The Ramsey, I forgot to mention on the Ramsey County one, that one is kind of a soft second, no interest loan, but it is completely, the funds are in essence free until you pay off or refinance the home, and then they ask for it to be paid back. In this one right here, this one's completely free after 5 years of payments. So if you make 60 on-time payments, which is equivalent to 5 years, the down payment assistance funds are completely forgiven. Then it kind of breaks down, if your credit score happens to be in this threshold, the max DTI is 45% with an automated underwriting system approval, similar to the Ramsey County. However, if you have a score of over 660, you can actually go up to a little bit more down payment assistance. And then as long as you have a AUS approval, the max DTI is according to what this says. So they don't cap you there. Key things to know: paying off debt to qualify is not allowed. If you have any Chapter 7 bankruptcies, you need to make sure that they're 2 years from the discharge date. Any collections that are not medical have an aggregate total of over $2,500 must be paid or resolved regardless of the age of a collection account. If you rent, we'll need to have a 12 months history of the payments of rents with either canceled checks or bank statements. If you live rent free with like a parent or family member, that is totally fine. We will need a letter from the parent or family member stating that no rental payments were required. And then you also need to have 3 months of reserves, kind of what I talked about before: principal, interest, taxes, insurance. Just making sure that you have that many months of reserves afterwards so that you were able to make the payment should a financial hardship occur. All right. See if there's anything else in here I want to touch on. This one is a little bit easier to get approved. So the income limit is 160% of the area median income. So in the last example I showed you, it was roughly $100,000 for 100%. In this case, between you and a significant other or spouse, if you make at or below 160,000, you would still qualify. So that is something to keep in mind. So there's some programs that are going to be tailored more to one person versus the other. And that's where I kind of come in to make sure that I'm putting you in the right program. This is all pretty good information, but I'm just going to touch on the highlights for you here. Basically, just ineligible properties, locations, state of Washington. Don't have to worry about that. Co-ops, 2 to 4 units in the state of New Jersey. So these are all things that I'm just going to watch out for when I'm pre-approving you and utilizing these down payment assistance funds. All right, so the last thing I wanted to go over, this was actually created by one of my colleagues. He's been in the business since 1998. His name is Michael Haug. Very good information though, and I like to touch on this and kind of help people that may think that they may not qualify due to their credit. And I'll go through this very quickly here. So I'm just going to read this really fast. Let me start by saying that the people that have the highest credit scores attainable have 4 or more credit lines that could be used at any given time, and this is the goal to shoot for. Examples of lines of credit that people with perfect credit have available to them are Visa, MasterCard, Discover, American Express, and or some store cards like Target or JCPenney. And the people that have credit with the highest credit scores attainable rarely use their cards, but when they do, they immediately pay the bill in full as soon as it is due. They never, ever pay interest, ever. My disclaimer, the reason I'm making the claim that your score could go up by 50 points in 50 days or less is because I'm making a few assumptions. Number one, I'm assuming that you don't already have a perfect credit score. Once you get over a 740 score, it's very slow going to improve your score. It's extremely rare to hit an 800 score. Very few people ever exceed that amount, but I know it is possible. This guide was intended for people below the median credit score of everyone in the United States, which generally hovers just below 700. I am assuming that you will not have any late payments going forward. I'm also assuming that you currently have less than 4 lines of credit. If you already have, for example, a Visa, MasterCard, Discover, American Express, then the only thing left to do is improve your score is to lower your balances as much as possible, as quickly as possible, until they are down to 0. After they are down to 0, you never again maintain a balance. You just pay them off in full as soon as the bill comes due. The easiest way to illustrate such a massive improvement in credit score is to use the example of someone that hasn't established or recently hasn't reestablished their credit yet. So here are the 5 steps for that scenario. Go to rentalkarma.com. That's RENTALKHARMA. So if you can add 24 months of your past rental payments to your credit report, the average time to see your results is in 2 weeks. This only works, of course, if you've been keeping current on your rent payments. Ask someone that you trust that has always paid their credit cards off in full every month and will continue to pay their credit card off in full every month if you could be an authorized user on their card, because all their credit that they've been making becomes your good credit. Obtain as many credit cards as necessary as to have a total of 4 different items reported on your credit. So if, for example, you already have done step 1 and 2, then you can either repeat step 2 more times or get 2 credit cards of your own. The point being is that you want a total of 4. When using the credit, only put extremely small charges on your card, and I'm talking like less than $20. The less you charge, the better. As soon as you get your bill, immediately pay it off in full and never maintain a balance. So here are some good frequently asked questions. I'm going to have to correct a couple of these just from experience, but for the most part, they're really good and kind of pertain to probably a lot of you, or some of you, excuse me. I have tried many times to get a credit card, but I always get declined. So you go to your bank and apply for what's called a secured credit card, or do a Google search and type secured credit card. You will never be declined for a secured credit card, and they would just as good as improving your credit as a normal credit card. So before my mortgage career, I was a banker at Wells Fargo, and I actually opened for a lot of people quite a few secured credit cards, but it is possible to be declined for a secured credit card. So just so you know that statement isn't 100% truthful, but it is something that most, if not 99% of people will be approved for a secured credit card. I always pay my loans and credit cards on time. I have never missed a payment. Why won't my score go up? It's because you are maintaining a balance. If you have things like car loans, student loans, or installment loans, things that you're unable to pay off in full every month, your credit score will continue to stay suppressed. I don't have the ability to pay my credit down to 0 balance every month. Does that mean that I'm out of luck for improving my credit score? You're not out of luck, but your score will improve much more slowly, if at all. When you're unable to pay your credit down to 0 every month, the next best thing is, number 1, have as low of a monthly payment as possible, and number 2, have as low of a balance as possible relative to your credit limit. The less you owe compared to the amount available to you, the greater the chances your score will start slowly improving. I have used services like Credit Karma, but I have since learned that the credit score they provide is inflated. How can I get an accurate credit score? Well, the best way to ensure that you're getting accurate credit scores is to have a mortgage professional like myself run a credit for you. I'll run credit for you for free. You simply go, I'm going to have you give you mine, which is prschmidt.com. So P as in Paul, R as in Robert, my last name, Schmidt.com. And that's where you can apply. The second best way is to go to myfico.com and pay a fee to get accurate credit scores. But I do not recommend this simply because if you think you may want to buy a home in the future, maybe whether it be 5 days, 5 months, or even 5 years from now, you might as well have someone like myself that will run your credit for free. In other words, I'll pay for it. You'll then have the additional benefit of having a real person have a free consultation with you to see if I might be the type of person you would want to have that done for you. Simply Google my name, and I'll pop up on the first page that you can read about me. I actually did this too. This is specifically for Michael Haug, but I had this too where my name was popping up first. I'm probably second or third right now, if you search my name directly. I'm not ready to buy a home right now. When should I apply for a mortgage? Answer, it's never too early to apply for a mortgage regardless of how not ready you are. The reason is because if you apply with me, the application's free, the credit report's free, and your approval letter is free. So you never pay me for anything. You have an extremely qualified, experienced person at your disposal who is willing to consult with you on all aspects of credit and financing an unlimited number of times for an unlimited length of time and never charge you a penny. I want to buy a home sooner than later, but I feel my credit score is just too low. I've heard that I need at least a 580 credit score, and should I wait to apply for a mortgage until I have taken the 5 steps you outlined above? And again, if you apply through me, the application is free, the credit report is free, and the approval letter is free. You never pay a penny. That being said, you will want to evaluate where you are with your current credit history. The worse your previous credit damage was, the longer you need to have been doing these 5 steps I outlined above. For example, let's say you've had a completely blank credit report. No good, no bad, no nothing, just completely blank. In this example, you could potentially be ready to be approved for a mortgage in as little as 3 or 4 months. If, on the other hand, you've had a lot of damage on your credit from the past that has since been fixed, you may need to follow the 5 steps for 6 months or more, depending on the extent of the previous damage to your credit. The most important thing to understand, though, is that it's not about how high your credit score is if you've been doing the 5 steps for long enough. It is possible to get approved with a credit score of 500. It is, but very, very rare. You have to have a lot of reserves, which is very, very tough to find. Right now with COVID, I think the minimum credit score still is 580, but they might bring it back down to 500 again. I have damage on my credit. I have neither the time nor the expertise to fix it on my own. I know there are a lot of places that will offer to fix your credit for you for a fee, but I understand that I should stay clear of them because they don't deliver on what they promise. Is that true? Yes, unfortunately, there are a lot of companies out there that are very expensive and don't deliver on what they say. The good news is if you would like to have someone repair credit for you, I can refer you to a reputable company that offers a money back guarantee. It is simply give me a call and I'll provide that contact info with you. I know Michael Haug has an individual. I have another individual that I highly trust who actually was in the mortgage industry for many years, was a manager. Actually, it was a lawyer, paralegal, so he knows the ins and outs of credit and what it takes to get approved for a mortgage. Very, very good at what he does. Question, I'm worried that if you run my credit, it will cause a hard inquiry that will lower my score. Is that true? Yes, any inquiry on your credit has the potential to lower your credit score. However, it does go down. If it does go down at all, it's rarely by much, especially if you already have a good credit score. The most important thing to understand is that unless you're already have an extremely low credit score, your credit inquiry that causes your score to go down will never cause you to be declined for a mortgage. A mortgage credit inquiry reduces your chances of getting approved for a mortgage is one of the biggest misconceptions out there. I've heard at least 3% down payment to buy a home. Is that true? No, there's actually several ways with no money down that is required, that is allowed as well. For example, rural housing development and USDA. Alrighty. So that was my little spiel. Hopefully you guys stayed awake. I'm going to go ahead and stop sharing my screen here. I'm going to give the power back to John. You can finish it off for us.
All right, beautiful. Well, everybody, thank you. Thank you for watching. I would love to help with regards to the real estate, but even if you have another person that you're working with, I would highly encourage you to seek Preston out as a mortgage broker. One of the things in my past, I had a mortgage company for about 20 years. I was a mortgage broker, and my wife has, had an affiliation at one of the larger banks. The nice thing about the mortgage broker that Preston is as a broker, he can bring things that the larger banks can't. And he has the ability to do lower credit scores. I mean, he would love to work with everybody that's 800 plus, but he's willing to work with people that need a little bit of help on their way to getting to be mortgage approved. And he can do things that a bank would just say no to. So I'm going to encourage you to begin your process with Preston and then seek me out after you have your approval. And I would love to help you find that home. In the event that you already have somebody you're working with, Preston can still finance you. So we're an a la carte package. So I would love to do and work in conjunction with Preston, but feel free to work directly with Preston if you're working with another real estate agent. Thank you again for your time. I would love to meet. You can reach me at 612-386-7027. It's john@johnmazzara.com if you want to drop me an email. And Preston, one last time, if you can just give your contact information to anybody that's watching.
So again, my number is 651-319-2000. My direct cell. You can text me, call me, pretty much anytime. And my email is Preston, my first name, @mintrust.com, which is M as in Mike, I as in Indigo, N as in Nancy, N as in Nancy, trust.com. Thanks, guys, so much for listening, and I hope you learned a lot.
Beautiful. Thank you, everyone.